Hey everyone, how's it going? My name is Richard Moglen, and welcome back to our stock market outlook video sponsored by MarketSmith. As always, we'll talk about the major indexes, leading stocks, a few different sources of sentiment, the IBD Big Picture article, and finally the Wishing Wealth GMI signal. And if you do enjoy my analysis, please go ahead and take the time right now to leave me a like down below. It really helps me out in my channel. And of course, subscribe if you want to see more videos just like this one every single week. With that said, let's go ahead and dive right in with the NASDAQ composite. And overall, we pushed up to this level and now have been rejected down from this kind of double top area, and we're back below, declining 21 and 50 SMAs, and we ended last week pretty much right on the lows. Now we may be a little bit short-term extended in the near term, but in terms of the price action, it's definitely negative on the major index, and that's kind of reflected in the mega cap names, which we'll go through in just a second. But overall, we'll have to see where it goes from here. Do we undercut this low and really push and challenge these lows down here? Or do we see some type of kind of upside reversal action and gap down, then a strong rally? If so, we could start another rally back into that 50 SMA area. And if we can push through that, then start a potential new uptrend. But as of right now, my view is pretty negative in the short term on the index at least, and we'll just kind of have to wait and see what happens. In terms of the S&P 500, it looks pretty similar to the NASDAQ, just a little bit stronger. Once again, below declining 21 as well as the 50 SMA, ending the week right at the lows. And we'll just have to see once again whether from this kind of little consolidation, 4-day consolidation, we push up or challenge that 200 SMA, or if we continue to break down and kind of trend it back towards these lows down here. So we'll just have to wait and see what happens. But right now, the short-term trend is down, and we're once again below all those key moving averages. And I don't like how we didn't really find any support at the 200 SMA. We just sliced through that, had those gap downs, and we lost that 4,500 level. So not the greatest look here, just a lot of chop, back and forth action, and pretty tough to position in stocks in this type of environment when everything is back and forth, especially ones that are really correlated to these major indexes. With that said, let's move on to the IWM, the Russell 2000 Growth Index. And this once again gives you the same pretty much picture. We rallied into the bottom of this base. We were rejected, and we're back below all the declining moving averages as well as the longer term 200-day moving average, and we're back below the 200 level overall. So once again, let's see if we can push up above those moving averages, those short-term moving averages, and start another rally up the right-hand side. Or we could also potentially kind of break this little bear flag here and continue to push down lower. Nevertheless, just kind of chop and really just back and forth action over the past few months. So that was the IWM in general. And here we've got the IWO, once again below declining 21 and 50 SMA. 200 SMA is really curling down here. And once again, we weren't even able to rally back into the bottom of the space. And this is definitely looking pretty weak. And once again, we've got this level to watch as well as this level to the upside. So we'll just have to kind of wait and see what happens. Looking at the FFTY, the Innovator IB50 ETF, this looks pretty bad as well. Big gap down right here on this day. Very strong distribution day, very negative day on that day, breaking these lows. And we're below declining 2150 SMA and 200 SMA. And once again, we kind of got that rally up into that 40 area, and we were rejected back down. Once again, not a very good look. However, moving on over to the XLE sector ETF, you can see this has been in a strong uptrend, and this is really where the leaders have been. And we'll just have to see whether we basically manage to break out from the stage to base and start another kind of push upwards, or do we have a kind of failure at this point, break those moving averages, or just kind of chop around for the near future. We just have to kind of wait and see what happens. And the other kind of leadership groups are the materials, of course, the fertilizers, oil and gas names right here, as well as the shipping stocks showed up, especially late last week, and we're pretty strong. We've got a few here, SLBK, Grin, and there's a few others within the sector. Let's actually just go over here. GOGL, also really strong breakout here, outside week. Zim, which has been obviously on a super strong tear, is definitely a laggard right now within this group, breaking those key moving averages. So if you're playing these, I would focus on the other names. This one just isn't as strong as those others as of right now. And this has already come a super long way since that, obviously, that IPO base breakout. So with that said, stay focused on the leaders and the stocks that are seeing rotation into them. And that's kind of the oil and gas names, miners, materials like AA, Alcoa, Arch as well, super strong action. MOS, and we'll go through a few of these charts in just a second and really take a look at the daily. And moving on to those individual names, let's go ahead and start with Tesla here. Not necessarily a leading area right now, but it's holding up better than most, above a rising 50 SMA and 200 SMA. And this pullback, for the most part, was on declining volume. So those are the positives. The negatives are we've got these two gap downs, big downside reversal here, and overall just not acting super strong and failing to hold that 1000 level. So we really need to see a big push breaking through this kind of sideways pivot, start to move up within this handle, and then potentially a breakout through this pivot if it does get back to that point. But I definitely want to see it hold at 21 EMA area. I definitely don't want to see it pull back to the 50 SMA, 200 SMA. That would kind of reset this entire kind of push up the right-hand side of the base, and it would just need a lot more time if that's the case. Moving on, let's also take a look at NVIDIA. The semiconductors were super strong in this area, but once again, these have completely kind of reversed, and they're back at the bottom of their bases. Definitely not a great sign for tech overall. And SMH, that sector in general, you can see is pretty much still basing within the stage one consolidation. So ideally, we start to see some accumulation down here, some big up weeks on volume, and that could potentially kind of set this thing up for another run. But right now, it's just not a leading area in the market. Moving on over to, let's start with Amazon. Take a look at the FANG names. This is just kind of chopping near its 50-day moving average below declining 21 EMA, and it failed right at the 200 SMA. So this just looks like it's still basing, needs a lot of time. Looking at Facebook, this is once again very weak. It rallied right to that HVC point and failed that. We're below declining 2150 SMA and maybe oversold, but not necessarily a stock that's leading the market as of this point. And the overall RS rating is a very poor 14. And right now it just is in a stage 4 decline. Moving on to Netflix, we also had a kind of confluence of resistance areas, the 400 level, the HVC level from that gap down, as well as the declining 50-day moving average. And now we're kind of back near the bottom of this consolidation, RS rating 13, also in a stage 4 downtrend. Moving on to Apple, this is holding up a little bit better, but we are below that 50-day moving average, but we're above a rising 200-day moving average. This and Google kind of look the best here, but Google kind of weak here, back near the bottom. Kind of Apple looks the best among these names. And moving on to some names that are actually working, let's bring up Oxy. This is setting up nicely into next week. You've got a little bit of a coil here under 60. I'm watching for a break of the short-term flag to the upside, potential for a really nice swing trade here. I like how it found support into the 21 EMA and just kind of went sideways as the overall market was pulling back late last week. And you got a super strong RS rating of 99. A lot of the other names in this group, CVX, near the top of its base as well. A little bit of a wedging action here, pushing higher on declining volume. So I'd like to see actually kind of a shakeout, big upside reversal on volume, and then a breakout. I don't want to just see a push through this level on little to no volume, see some churning action up here. Likely that would fail and just kind of roll back into this overall base. ExxonMobil looks pretty similar as well to this, moving up on declining volume, but just kind of wedging up there, as I said, on declining volume. A few other names in this group, MTDR, once again, showing pretty strong action. Looks like pretty much an inside day to end out last week on declining volume. So watch for a break through these highs, which are pivots. And moving on to some fertilizers, we've got MOS acting super strong in a really nice uptrend, definitely extended. The proper buy point was down near kind of this area or right here through this flag, or even here or on this big upside reversal off the 21 EMA. Now you're just kind of extended from any type of structure, and it's just trending above those moving averages. CF within that kind of same space, also a nice uptrend, but once again, pretty much extended here, pretty choppy as well. This is tough to trade, and we're holding above that 100 level. Moving on to some shippers, we've got SBLK, which I brought up earlier. Nice action late last week, breaking through this pivot and that 30 level, and I'd love to see kind of some fall through into next week, but ideally maybe an inside day first and then a breakout. That would be awesome. Also taking a look at Grin, this had a really nice push here on Friday and off that 50 SMA area, and Gogol, GOGL, had really the nicest breakout of all of these, pretty much breaking into all-time highs and going over to a weekly. You can see this is a pretty huge basing structure, which it just kind of pushed out of. So maybe a name to watch going forward. And this is a leading group as of this moment. Moving on to miners and materials, we've got Alcoa. This pulled back to the 21 EMA on pretty light volume. showed some respect for the 50 SMA area as well as the 10-week, and then we had a push up. So this may be actionable if we get maybe 1 day of pullback, then a continued push up. Also taking a look at Arch in the coal area, super strong action breaking out here. AMR, I've got a little bit of this right now, super strong action, a little bit short-term extended, but I like the volume breaking out of this potential high tide flag, though this has come already quite a long ways. Bringing up MP, we've got this chart right here pulling back into the pivot area on pretty light volume, not the greatest action, but I'm glad it's not on high volume, and we'll have to see whether it can kind of hold that pivot area as well as the 50 level and kind of bounce back up and kind of restart the uptrend off the 21 EMA. Moving on to steel, we've got STLD here. Once again, in a really nice trend off that 21 EMA. Breakout of a flag here as well. NUE, very similar. Nice action through this kind of horizontal pivot and good end to the week, although definitely a little bit short-term extended here and not huge volume on this push upward. In terms of kind of more traditional growth, we've got LULU, which is kind of within this longer-term basing pattern, really started all the way back in August of 2020. We're pushing up the right-hand side of the stage 2 base here, and going over to the daily, you can see that we're holding that 200-day moving average, really light volume on this day, and decent action considering the action of the overall market on that day. I love to see kind of that 200-day shift to support and for it to continue to build out a flag here and ideally push up the right-hand side of the base and put in a handle higher up within the structure. Moving on, we've also got tech here, which is forming an ascending base, which is a stage 3. Nice breakout through these levels on Thursday. And once again, not much give back here on this day when the overall market was down pretty large into the end of the day and closing right at the lows. A little bit of a downside reversal, but very mild considering the overall market picture on that day. Also taking a look at BRCC, we had a really strong push out of the IPO base. And I think this was a SPAC, so technically not an IPO base, but pretty much an IPO base here. Nice action through this DTL. You can draw it through these highs as well. And then a little bit of a cheat entry here, a little bit of a tightness, consolidation, contraction, whatever you want to call it. Super strong push. And now 3 straight bars from 33 all the way back down to the pivot in just 3 days. And this type of selling to me says it needs a little bit of time. Maybe we get a big upside reversal, undercutting the pivot, reclaiming it, and that starts something. But I don't like how severe this was. And once again, you have to be pretty quick with these IPO type names and names that have a lot of kind of sellers who had it pre-SPAC, pre-IPO. Also bringing up Bros, continuing on with the coffee theme. This is actually setting up kind of constructively here. Acted pretty strong relative to the market the last few days last week and setting up right near the moving averages. So this is once again in play, and this may be a little bit safer to buy, or you can manage risk a little bit tighter versus trying to buy versus kind of this level up here. You've got a little bit of a consolidation here. You can use the moving averages as potential areas where you put your stop if we do get a nice push up through these levels. And lastly, in terms of individual names, we've got EMPH, which kind of broke this short-term uptrend, kind of wedging action, and is back at the 21 EMA, but kind of further developing its longer-term base. So if this does kind of shape up, reclaim 200, definitely one to watch and have on your radar. SCDG as well within the same space, just kind of going sideways, forming out this handle, but not great action here. I don't like this at all. Very kind of wide and loose, and it is holding that 300 level and the 50-day, but I'd love to see it firm up. But if we do get a push up from here, that could be potentially actionable as it tries to push up the right-hand side of this base. And finally, let's take a look at PanW, which is in the cybersecurity space, holding up pretty well here, right near all-time highs. You had a little bit of give back on Friday, but that's pretty much nothing compared to what the market was doing. And I love how we're finding support at the 21 EMA, as well as the confluence of this prior kind of area of resistance. CrowdStrike as well, starting to push up the right-hand side and acting pretty well. And kind of like LULU, I love to see the 200-day moving average transition to support. So with that said, let's move on over to sentiment and start with my Twitter surveys. So taking a look at the surveys, we saw a slight increase overall from last week, but still this is pretty low overall, 32.5% bullish. Looking at the name exposure next, we saw a nice drop here. I'd love to see that trend continue. And the put-call ratio is really declining. Not a great trend. I'd love to see kind of some fear come back to the market, get this back above 1.15. And lastly, in terms of psychological indicators, we've got the Bulls versus Bears poll. And you can see we're crossing down just a little bit, which is a good sign. So still plenty of fear coming into the market, but I would like to see that put-call ratio kind of shoot back up briefly. If we do get maybe 1 day shakeout, a 1 day big gap down, that would, I think, do the trick. So that said, let's move on over to the IBD big picture article. And the headline is tech stocks sell off as treasury yields surge. Elon Musk offers to purchase Twitter. Overall, they discuss about the potential hostile takeover of Twitter by Elon. I'm sure you guys are aware of that. Let me know your thoughts on that, by the way, down below in the comment section, and discuss kind of how the overall market uptrend is struggling, and point out some stocks down here as well. Earnings is coming up, so we'll have to see whether we get some earnings movers. Maybe we see some groups kind of heat up if we see kind of some overall moves together, but we'll just kind of have to wait and see on that. And overall, their take is an uptrend under pressure. 5 distribution days on the S&P 500, 4 on the NASDAQ, so that's definitely getting up there overall, and you've got some leaders up in volume and some down in volume as well. Lastly, we've got the wishing well GMI signal, which is currently red since April 12th, and the GMI score was a 3 out of 6 on that Wednesday. So overall, my current take is a market in correction. We're really kind of in a tale of two environments, like we've been in pretty much for the last few weeks, last few months, where the energy sector, miners, fertilizers, all those names are in strong uptrends, but tech is really struggling. So pick and choose your spots, manage risk. It's not a time to be completely diving in full leverage. Be very selective, manage risk tightly, and if you find some opportunities, take them. But remember, the most important thing during a correction is to preserve that capital and preserve not only your financial capital, which most people talk about, but also your kind of energy, mental capital as well. So with that, I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos. Thanks.